Hello everyone. So this is a revision video on cash book and petty cash book. Please feel free to pause the video at any one point in time if you need a little bit more time to see what's on the screen or if you need to think about what you just heard. Now, cash book and petty cash book came out several years ago and hasn't come out since, so I thought I would do a video for you to refer to when you are revising this topic. Another video that's coming out your way probably over the next couple of days is the long-term borrowing. So you can also look at that to do your revision because one or two of you have requested for it. Okay, so what do you need to know for cash book and petty cash book? Now, of course, the theory, you need to know what is the purpose of cash book, how to read and interpret the cash book. There's no need to know how to record. That's a 4N thing. 5N don't need to know how to record. Read and interpret is good enough. And then you need to prepare the relevant ledgers based on a cash book. For petty cash book, you need to know its purpose and explain how the imprest system works, what are its advantages. And you need to be able to calculate the imprest amount and the reimbursement required to restore it. Now, you also need to know what is the relationship between the cash book as well as the petty cash book. So let's start with the cash book first. Now, the cash book will record all the cash and all the bank transactions. It is also a record of the amount of money that you have in the cash account and bank account at any one point in time. All you need to do is to take the debit balances minus the credit balances. You will be able to find out how much cash in hand or cash at bank balance at any one point in time, right? So it is a ledger account for cash and bank balances. So there's actually no need for you to prepare another ledger in the general ledger. Your cash book, if you have a cash book, it is your ledger. But you will need to prepare a ledger for discounts. It is also a record of money that you receive and you have paid. So let's go on to the next section. We will talk about how to read and interpret the cash book, debit balances, credit balances, and how to calculate the balance brought down at the end of the month. So firstly, this is how your cash book looks like. There are three columns, columns for discount, cash, and bank. There's also kind of like a T in the middle, dividing the cash book into the left-hand side column and the right-hand side column. Your left-hand side column is basically your debit balances. So when you have increases in your cash or bank account, when you have discount allowed, that's where you record them. Your right-hand side columns are your credit balances, all right, or rather your credit transactions. When you have a payment in your cash or your bank accounts, when you have a discount received. So if we take a look at January the 1st, you can see that there is a cash balance in the debit column of $500. All right. So what this tells you is that at the beginning of the month, there is a $500 in cash in hand. It's a positive balance, means you literally have money, $500 money inside your cash in hand. On the other hand, on the 1st of January, there is a balance brought down in the credit column of your bank account. All right. Credit column bank account. What does it mean? It actually means that there is a bank overdraft. All right. So you could say something like the business had a 6,005 credit balance or a bank overdraft in the cash at bank account. Right. So that's the how you would read the balance brought down. Now, let's talk about all the debit transactions, okay? The first debit transaction we see is this sales on 5th of January, and then you see $800 under the cash column. Now, because this $800 is in the plus side, all right? It's in the plus side of the cash book, plus side of the cash in hand account. It means that cash in hand account has actually increased by $800 because of sales. So what does that mean? It means that your business made a cash sales or deposited, or rather received $800 cash on 5th of January because of sales. Alright? Another transaction that we see is on the 12th of January. We can tell that there is $18,000 also in the plus column, but this time in the bank column. Alright? So what this means is that bank increased by $18,000. The other account affected was Harley. But you also see that the discount allowed, there was a $200 in the discount allowed. So what does this tell you? It tells you that the business received a $18,000 check because it's a cash at bank account. It's from a creditor. You can say credit customer. You also can say trade receivables Harley after a $200 cash discount or $200 discount allowed. That's fine as well. So feel free to pause if you want to think about or read again what you have heard. Now you will also see on 13th of January, there was a $100 inside the bank account. All right, it was an increase in the bank account, $100. What's the other account affected? The other account affected is cash in hand. So what has happened here? Basically, the bank increase debited. So the other account, which is cash in hand, right, must have credited $100. So it's basically taking money from your cash in hand to put into your cash at bank. You can write on 13th of January, the business deposited $100 from cash in hand into the business bank account. So these are some of your debit transactions. Oh, there it is. You can see also here. Credit account, your cash actually minus 100 and it went into the bank account. So now let's take a look at credit balances. Alright, so with credit balances, we are looking at the credit column. The first one we see is this Johnny, 11th of January. So what does it tell you? It tells you that you have actually a minus a credit cash in hand of $120. And who basically, if you minus cash in hand, right, means you paid somebody. So who did you pay? You paid Johnny, and Johnny gave you a discount. So you would say something like on 11th of January, the business paid creditor or credit supplier Johnny $120 via cash, because in the cash column, after a cash discount or after a discount received. So what do we have next? We have a drawings. Alright, and this drawings is in the credit minus $200 inside the bank column. So what happened here? Very straightforward. The owner took $200 from business bank account, but because it's drawings, you cannot say as drawings. You must say for personal use. Okay, so these are the main credit. These are some examples of credit transactions. Alright, so finally we look at how to calculate cash book ending balances. So basically, how would you calculate the balance column, right? You'll take your debit column minus away your credit column. Why is it debit column minus credit column? Because debit column are all your receipts. Alright, all your receipts are in your debit column, and the credit column has got all your payments. So if you want to know how much money you have left, you will take whatever money you receive minus whatever you pay out. Alright, so you'll take your receipt minus away your payments. Now at this point in time, when you total up the cash column for your credit column for cash and credit column for bank, you see that they are actually different from your total column, your total values in your receipt column, in your debit column. Alright, these two values are different at this point in time. Why? Because you have received more money than you paid out. Alright, and taking your receipts minus away your payments, that would tell you how much money you have left. So let's start. If I want to calculate the cash balance for my cash book for the month of January, what I need to do is to take the total receipts, the total debit balances, minus away the total payment or total credit balances. So I would sum up the debit balances in cash column, which is 1,003, and minus away the payment amount, which is $220 credit column. So 1,003 minus 220, this is my new balance brought down, which is $1,080. How do I record this $1,080 inside my cash book? And this is how I would do it. At the end of the day, right, the numbers inside the triple line here, these numbers which I'm highlighting, all right, all these numbers which I'm highlighting, they actually need to be the same. So which numbers need to be the same? All right, then these numbers and these numbers need to be the same. So how do you get 1,300? You actually took 120 plus 100 plus another 1080. All right, this is the 1080 and you'll get 1,003. So this 1080 is actually your balance carried down. This is the balance, the amount of money that you have at the end of the month. This $1,080 is therefore your balance brought down, your new balance brought down at the end of February. At the end of January or the beginning of February. What about the bank account, right? Cash at bank account. So firstly, if you if you took your total receipts minus away your total payments, your total receipts is $1,100 minus away your total payments, which is 6,007. Oops, for some reason or other. Yeah, anyway, the one shouldn't be there lah, huh? Your total payment is 6,007, and your new balance brought down will be $11,400. So again, the two values here, this one and this one, supposed to be the same. So how do you make it the same? All right, actually your inside your credit column there should be a 11400. Then it will add up the 650 plus 200 plus 11400. That would be 18,100. It will be the same. So it will look something like this. That's the amount of money that you have in your bank account, $11,400. And this amount would be your balance brought down at the beginning of February. There you go. This is your cash book. Now, how do you post the entries inside here into your general ledger? Which of them go into the general ledger? Actually, this amount, this amount, this amount, this amount, no GL. It does not go into the general ledger. Why? Because the cash book is already a general ledger for your cash and your bank transactions. The only thing that goes into the general ledger are your discount allowed and discount received numbers. Okay, so firstly, you need to know what the general ledger is. Your general ledger basically have all your journal entries and your totals in the special journal. These are posted into your GL or your general ledger. The general ledger has all the accounts or all your ledgers that you require to record all the transactions of the business. Generally, general ledgers or GL accounts or GL ledgers have this format: date, account, debit, credit, balance, these columns. All right, and then your journal entry, you will record it inside these columns. Like I mentioned just now, the cash and the bank payments and receipts are not recorded into the GL. because the cash book is a ledger for cash and bank account, no need to post the cash or bank transaction into the GL again. What you need to post into the GL, only your discount allowed and your discount received. They need to go into the respective discount allowed or discount received ledger account in the GL. The totals, only the totals. So how would you post this discount allowed $200 in your cash book? You post it to the discount allowed account, which is shown here. Alright, and you post it like this. Now this $200 is from trade receivables. And how would you post, at the end of the month, this discount allowed, or rather at the end of the year, the discount allowed is transferred to profit or loss. Now, if you have a discount received, what you would do is to post it to the discount received ledger account in your GL. Alright, it's a credit number, so you will increase the discount received or increase your income. At the end of the year, it goes into your profit or loss. So that's the main things that you need to know for cash book. What about petty cash book? So what you need to know are purposes and how the imprest system works and its advantages. Okay, so basically, the long and short of it is that your petty cash officer holds onto a certain fixed amount of money. This fixed amount of money is used to pay the employees, and whenever this fixed amount of money is running low, the petty cash officer will get a reimbursement from the chief cashier. Alright, it's a little bit like treasurer system in class where your form teacher collects money from everybody, but because cannot give the whole few $100 to a student, right? So the form teacher will give maybe $50, and then when the student has paid people who claim from him, need more, go to form teacher and take more. So a bit like that. Alright, for this lesson, we will only focus on this, calculating the impressed amount and the reimbursement required to restore it, and what is the relationship between the petty cash book and the cash book. So your petty cash book looks something like this. Also like macam like a T. Can you see a T? So macam like a T also. Alright, and you do need to, these are the things that you must be able to do. You must be able to read and interpret the transaction, calculate the impressed amount, calculate the reimbursement to restore it, and you must know where the reimbursement cash is coming from. Okay, spoiler alert, it comes from cash in hand. Basically, you are transferring cash in hand, so you are recording cash minus and petty cash plus. Okay, so basically, money is going from the cash in hand account into the petty cash account. Alright? So, as I mentioned, it's like a little T, and same as the cash book. Okay, actually the T is not there, The T is actually here. The T is actually here. Here. Okay? So, your debit column is anything inside the receipt column, and then your credit is from your total payment onwards. All these are your credit columns. So how to read it? As the same as before. The balance brought down, that is the amount of petty cash balance that you have at the beginning of the month. Now you also see that there was immediately after 1st of June, right? You can see that there is a receipt, a debit plus of $102, and it says there cash. So what does it mean? It means that money is coming into the petty cash book. Alright, money is coming into a petty cash book. Where did it come from? It came from your cash in hand account. How much of it? $102 came in from the cash in hand account. Alright, so what is this $102? Why suddenly got? It's actually a reimbursement. It's a restoration of the petty cash impressed amount. Alright, so how do I calculate what is that fixed amount that I spoke about earlier? I would take my balance brought down, that is the amount of money I have left, plus whatever my chief cashier gave to me, which is $102, and the fixed petty cash impressed amount that I have is $300. And this is called a reimbursement from your chief cashier or from your cash in hand account into your petty cash book. Now, I also see inside the credit column, there's a $25 bus fare. So what is this? Basically, it's a payment from petty cash for $25 of transportation expenses. So you also can see that inside the payment column, the details column, right? All these are your individual, like account names, okay? You could have payments, but at the same time, you could also have receipts. So in this example, you have basically received $300 from cash sales and you put it into the petty cash book. So this total payment column are your individual columns. So all these total payments. So how do you get 535? You must take 25 plus 430 plus 10 plus 50 plus 20 all add together, and that will give you $535. Now the question is, how does this get posted into the petty cash, into the general ledger? All right, how does this get posted into the general ledger? Actually, all these numbers, right? 25, 430, 10, 50, 20, all these get posted into the individual transport account. All right, it gets posted into the individual postage account, stationery account inside the general ledger. So the individual numbers get posted into the general ledger. Double entry, if let's say I am doing transport, all right, so let's say I'm posting transport, right? This transport, I would increase transport, and the other account affected, I will write petty cash. All right, inside the transport ledger. Remember, where does the ledger sit? The ledger sits in the general ledger. So this total will get posted into the transport ledger, which is in the general ledger. Okay. So just now we just mentioned the total payment column is equal to the individual column, right? Then what is this balance carried down? So basically this balance carried down is your ending petty cash amount, which is your total debits. All right, your total debits. The total debits here minus away your total credits, minus away your payments, and you got $85. So this tells you that you have $85 in your petty cash account on 30th of June. So if that's the case, what is the amount that you're going to be reimbursed? Now remember, just now we mentioned that the float amount we calculated, right, was 300. How do we know that it's 300? We took these two numbers added together. We said, oh, the petty cash impress float or that fixed amount is going to be $300. So if you have only $85 left, how much money are you going to be reimbursed? You will take $30 minus away your $85. All right, you are going to be reimbursed $215 in cash. So the way to calculate your impressed amount is to take your float amount minus away whatever petty cash balance you have in your petty cash account at that point in time. And that is a reimbursement that you are going to get. Okay, so in today's very short video, actually not very short, nearly half an hour I think, you have learned all these items, and if you still don't understand any one area, you could watch it again. Otherwise, you could come and look for me. 加油! The long-term borrowing is coming soon.